And thank you so much for being on this call, on this webinar today. Before we get started, I'd like to special thank you to our colleagues at Marston Lundy for their support throughout this project. We've enjoyed a very strong partnership through every stage of the project, and we also want to thank all of you who have dialed in or joined the webinar today. As Lori said, we're very interested in your questions, so please send them throughout the webinar, and we will have a time at the end for questions. Now, as we get started, I'd like to take you back to the very beginning of this project and talk about why we developed an outlook for giving in the first place. As many of you know, the philanthropic sector is changing at a very rapid rate. Alongside these changes, there is a growing demand for high-quality information. Fundraisers, nonprofit leaders, and donors, board leaders, and virtually all segments of the sector are used to instantaneous data and information. As the world becomes far more complex and sophisticated, current data is required to maintain leadership in fundraising and nonprofit management. I should note that today we'll share information on the outlook for various types of giving, various sources of giving, but there's still areas where we lack complete information, and we require comprehensive information in all areas in order to build the complex models that I'll be sharing today. In other words, the results you'll see today are based on econometric models, and those typically require decades of data to be accurate. And unfortunately, many subsectors, we just don't have that complex information available. So one of the key issues as we're talking today is that you're going to learn a bit about the methodology that the Outlook is based on and how this information can be. You'll also hear throughout the webinar a lot of discussion of the role that the economy plays. And you may ask, why is the economy so important to this discussion? Research, as many of you know, has long established that charitable giving is linked with national economic trends. In fact, as we think about the outlook for giving, one of the key economic indicators that we'll be looking at is the overall strength and health of the national economy. And so throughout this webinar, you will hear that underlying discussion. So let's go to what's changing in philanthropy today and why the outlook is so important. There are three areas that we can observe and measure change in the philanthropic sector. The very first and perhaps the most visible is the changing demographics within, and these are causing important shifts in philanthropic giving patterns. You are all aware of the discussion of the rise of millennials. Millennials in particular are emerging as important donors because they're starting their economic lives and they're beginning to enter into the career phases of their lives. Millennials are also very interested and likely to use their wealth to create social impact. Many of them are starting their giving legacies at younger ages, and this age group is also raising new questions about how philanthropy can most effectively be leveraged in creating change. One of the most visible and wealthiest of all the U.S. millennials is Mark Zuckerberg and his wife, Dr. Priscilla Chan, who most recently announced that they would be contributing 99% of their lifetime wealth in form of Facebook shares to establish a new limited liability company. This is certainly raising new questions about giving because the Chan-Zuckerberg initiative will actually give through a range of vehicles. Their goal is to invest in social impact ventures as well as philanthropy. The millennials are also a very diverse group. That is a big point that we have been noting because it's no longer a one-size-fits-all, but certainly a range of race and ethnicities are represented in the millennials. Alongside the changing demographics, we certainly have the aging boomers and the upcoming retirement of many of the boomers. But many of them are working longer, and so this is an important group for fundraisers and nonprofit leaders to pay attention to. Alongside demographics, we have our changing economic and political climate. As all of us know, the U.S. has nearly recovered from the Great Recession, but certain regions of the U.S. and socioeconomic groups are still to fully recover. Recent data shows that for many U.S. middle-class households and lower-income households, some of them have not regained their pre-recession wealth levels in particular, and pockets of the country, specifically in areas of the Southeast and so forth, have had difficulty recovering from the recession. So across the U.S., we're still seeing pockets of places that are yet to recover. And then finally, and perhaps most interesting and exciting for this discussion, is the role of technology. We're seeing social media and electronic platforms and websites and mobile giving increasingly used within the nonprofit sector. And these are changing the way that nonprofits interact with donors. These technological advances have the potential to make philanthropy both more inclusive and more democratic, but they also come with challenges for nonprofits that are evolving to start to use some of these peer-to-peer fundraising methods with greater ease and to engage donors in new and interesting ways. Unfortunately, technology has certainly some drawbacks that we can talk about as we think about traditional models of giving. Online giving today is growing as a share of overall giving, probably up to 10% of all giving today. And so because we have these new tools, we also have new challenges as nonprofits start to learn about how to use that to get the results that they desire. So with that sort of sets the stage for the philanthropy outlook and why it's necessary. Let's go now and delve into the methodology and the results. First, the methodology. As an economist, I could spend all day talking to you about the initial building blocks of this model, but I'll try to keep this at a very high level so that we can get to the results. So just by way of background, we, the research team here at the Lilly School, tested scores of economic variables and hundreds of various models. In fact, the combinations of variables and models were in the thousands of regression models. Based on these initial testing and the development of these models, we selected 20 key variables as well as their lags. So we look at the current impact of these variables on giving, but also the past impact. And using this combination of variables and their lags, we were able to project both the economic variables and the giving levels and changes. One key difference in this research project compared to other projects that perhaps some of you in the audience are familiar with is that here we're doing two things. First, we're projecting these economic variables into the future that will impact giving, and then in turn we're also using these underlying economic variables to tell our audiences what to expect in terms of giving. So basically a series of very rigorous testing to finalize the key variables that would be used. And then once we finalize those variables, we develop the models that then in turn tell us about giving in 2016 and 2017. I should also note that the giving variables that we use in this study rely on data through the third quarter of 2015. And so as we get new information in the future, we'll be able to update these models. The table that many of you have in front of you shows you a sample of the variables that were used in constructing the outlook. Keep in mind, to get a more exhaustive list of the variables, many of you have the actual report and you can refer to it. But I just want to talk about some of the main variables included. This is not an exhaustive list. We would be here all day if it were. So I'm just giving you a brief snapshot of this. First, on the corporate giving side, we look at how current profit levels for companies drive their giving, but we also look at retained earnings and corporate savings and how that impacts giving decisions. Alongside the corporate level variables, the models also include the performance of the overall economy, the aggregate economy measured by the GDP and the stock market performance. As we turn to individual giving, one key variable that emerges is personal income. Households give based on their economic and financial conditions, and this is reflected both in household incomes, but also on the index of consumer sentiment, which actually captures that sense of economic and financial security. Now, looking at giving, what's related to estates and also foundations, we looked at two key variables alongside a lot of other variables, specifically current as well as live GDP, so past performance as well as current economic performance. And we included information about interest rates because those tell us something about return on investment. And then finally, you'll hear results related to giving to education. This is the first time we're including an outlook for education in the outlook. And you can see that there are many potential determinants of giving to education, but I'm just going to talk about income because we know that households give to their educational institutions. That's captured in personal disposable income. And we've also included the interest rate on government securities to capture, again, the returns to investment. Now, to get you ready for the results, I just want to say that the economy has been on everyone's mind this year. Why? Because there continues to be a lot of economic news coming out even as we speak. The stock market has been an area of a great deal of interest because January 2016 in particular was one of the most volatile periods observed. In particular, in early 2016, the stock indices, nearly all of them plummeted, dropping nearly 6% in the first week of January, and commodity prices also showed decline. However, I should note on the more positive side that oil prices dropped dramatically in 2015 and they continue to go down in early 2016, but they're starting to rebound, and that has actually boosted the stock market over time. Again, on the more positive side, we've seen housing values start to increase and actually perform quite well in 2016. Home values are projected to continue to increase this year. Some estimates suggest 5 to 6% in 2016. 2017, although those forecasts do tend to vary. We're also seeing an increase in home sales in most parts of the country. So generally, the housing market continues to be a bright spot on the economic landscape. When it concerns employment and the labor market, that's an area that we continue to watch quite closely in terms of setting the stage. And there, 2015 was especially a good year for the labor market with declines in the unemployment rate. And this trend continues in 2016. And I think this has been a particularly positive area alongside housing. Now, as we look at projections for the overall economy, the World Bank as well as the International Monetary Fund have projected that the U.S. will grow roughly at 3% in 2016. And in some ways, the U.S. continues to perform better than the world overall, certainly than some of the emerging economies recently. And I should say that the consumer price index has remained relatively steady over time. So if we were to take all these indicators and say, what's the state of the economy today? I would say certainly there's a great deal of volatility. Uncertainty seems to be part of explaining what's going on, but we do have some very promising areas around the housing market and the labor market that economists call that the real sector, while the financial markets have shown a recovery over time that continues to be an area of a lot of volatility. So the economic picture does seem to be mixed, but based on many of the forecasts out there, the U.S. economy continues to be poised for growth in 2016 and 2017, notwithstanding the uncertain global economy and the volatility of commodity prices, specifically oil. All right, so with all that as the background, the outlook does several things. The first is to tell us something about the distribution of giving. These charts that you have in front of you tell us about the proportion of total giving that's going to come from each source in 2016 and 2017. The very interesting finding here is that individual giving remains the largest slice of overall philanthropy, but that slice appears to be growing smaller, relatively speaking, with foundations increasing their share of overall giving. Within the foundation slice, that includes both large foundations as well as smaller family foundations. I should note that corporate giving has stayed relatively stable over time at 5% of overall giving, and that is the projection for 2016 and 2017. And as states show some potential for growth, 8%, 8.1% in 2016, going up slightly to 8.2% in 2017. So with the outlook telling us something about how giving is going to grow, it's also telling us where that growth is going to come from. And you can see that one big takeaway is the proportion of giving coming from individuals and households will decline slightly, while the proportion of giving that's coming from estates is going to rise also slightly. Now let's turn to the overall giving numbers. Based on the results from the outlook, total giving is predicted and projected actually to increase by 4.1% in 2016 and 4.3% in 2017. The specific factors that will affect overall giving are, first, trends in the current year's stock market performance. That will affect giving by household as well as giving across the board. And generally, what we should note is that it's not just this year's stock market values that impact giving, but also past years as well. The second trend to pay close attention to are changes in personal income over time. And generally speaking, we're projecting above average growth in personal income. In addition, what you'll see as we discuss this result is that this broad result of 4.1% is not going to be present for all the sources of giving. They've all grown essentially at different rates over time, and there has been some unevenness in their growth rate. This actually reflects the differential impact of the economy on the different sources of giving. So let's start with the individual component of giving. As we noted, individual giving is by far the largest segment of charitable giving, and this is composed of contributions from itemizers, households who itemize their charitable deductions on their income taxes, as well as those who do not itemize. So we're measuring here giving from all American households, itemizers as well as non-itemizers. We're predicting an increase of 3.7% in 2016 and a slightly higher rate in 2017 of 3.8%. The two factors that will affect the majority of U.S. households over time, certainly you can see that giving is by individuals is slightly lower than the overall giving increase, and that actually tells us something about how the economy will affect different segments of the charitable sector. Much of the slower growth attributed to individuals is due to the fact that lower to middle income households have incomes and assets that are not growing at the same rate as the growth of high net worth households, reflecting growing inequality in the U.S. And so as long as we continue to have the growth in personal income and also growth in household wealth over time, we project that giving in 2016 and 2017 will be expected to grow slightly above the 40-year average for growth, while in 2017 it will be slightly higher than the 40-year average. And we'll come back to that, whether this growth that we're seeing by individuals is comparable to what we've seen in the past. Now you'll note right away that the giving numbers, projections for giving by foundations, are higher than what we observe for individuals. In particular, the outlook projects that giving by foundations will increase by 5.7% in 2016 and 6.4% in 2017. The two factors that will affect giving by foundations are increases in the stock market over time, as well as projections in GDP growth, not just in the current year, but also in the past year. We've seen that, generally speaking, trends in the stock market affect giving by foundations, and it's not just the current year, but also the previous year, because many foundations base their giving on 3 or 4-year, in some cases 5-year rolling averages. That means that foundation giving will be slightly less impacted by current economic trends, and we know from our work with other from other research projects that foundation assets have been increasing in the last few years, although some endowments have been impacted by the volatility of the stock market. The next area is one of a lot of interest. Giving by estates, as we mentioned, is about 8% of the overall charitable pie, and we have projected in 2016, based on the results from the Outlook, that giving by estates will increase by 4.8%, and in 2017 by 4.9%. As many nonprofits have had success with planned giving, there has been growing interest in estate giving over time. Estimating planned giving, however, is much more challenging because, of course, the timing of death is actually very difficult for anybody to project. And we also know that bequest giving is less tightly linked with current economic conditions, so it tends to be a less certain area of giving. That being said, we do know that the amount of an estate, the amount that will ultimately be bequeathed to a nonprofit, depends on the asset growth at the time of the donor's passing. And so we know that if the growth in assets held by estates slows, less will be given in the form of bequest. In recent years, there have been some very large estates that have positively impacted estate giving and therefore overall giving. Some estate gifts in recent years have been among the largest ever recorded. So this means that there's still a very positive climate for planned giving, and that for many donors, the idea of participating in planned giving seems to be an area of gaining interest. Demographic shifts with an aging boomer population will also likely positively impact planned giving going in the future. So just to quickly summarize, giving by estates can vary substantially, and this is largely due to very large estates being made in certain years. And we're projecting this healthy growth of 4.8% in 2016 and 4.9% in 2017. Giving by corporations is projected to increase by 4.6% in 2016 and 4.7% in 2017. Corporate giving is the area that it could be argued is changing the most. Many companies are shifting to a much more strategic approach, and this is true of both large companies as well as small companies. Companies are also shifting in terms of how they're supporting nonprofits. Some corporations are choosing to invest more in cause marketing and sponsorships as opposed to outright philanthropic giving. And some corporations are taking the social impact of their work much more seriously. In fact, some corporations, you would argue, are increasingly blurring the lines between a nonprofit and a for-profit. Some very prominent examples come to mind. For example, Starbucks and their recent work around sustainability actually leads to new questions about the role corporations can play. The other point to note is corporations like the Chan Zuckerberg Initiative are using new tools to actually drive social change. And so that's also raising a new question about philanthropy. Now, despite these positive trends in terms of corporate giving, it's important to note that some industries within the corporate sector may not fare as well in 2016 and 2017. Specifically, the oil industry, that's an area where many nonprofits are watching. As well as some companies that are doing relatively well in this economy. The airline industry comes to mind, where lower fuel prices actually help their profitability. Now, as we think about what will drive giving by corporations in 2016 and 2017, certainly the performance of the stock market is one to pay close attention to. Also, corporate savings, which are defined as corporate profits that are left over after taxes and dividend payments. The other point to note is whether this is a positive or negative trend, the increased use of marketing budgets to support nonprofits rather than direct philanthropy. And so that also could present a bit of a challenge for corporate giving going forward. All right, as we try to summarize these findings, I'd like to just try to put these numbers in perspective. Are these growth rates optimistic? Are they mixed? What do they tell us about what giving will look like compared to 10-year averages, 25-year averages, and 40-year averages? Now, sort of the good news here is that in 2016 and 2017, total giving is expected to rise above its historic 10-year average. The past 10 years have been perhaps some of the more challenging years that the philanthropic sector has observed. And so I think it's good news and it's certainly a very good time for the nonprofit sector, especially if we compare it to the past 10 years. Now, if we look about the 40-year average, which is a much longer time span, giving in 2016 is slightly below that 40-year average. So in that sense, this is a good time, but it's not necessarily a great time when we look in this 40-year span. So I think the good news here is that we're certainly above the 10-year average and emerged from the dire situation that many nonprofits found themselves in during the Great Recession, but we're still slightly below the 40-year average, which in some sense may be the better benchmark. If we look by type of donor, individuals are above that 10-year average and in line with the 25-year average. When we look at giving by foundations, we're still below that 25-year average and more in line with the 40-year average rates of growth. And certainly giving by corporations seems to be better than the 10-year average, and that's the case for estate giving is slightly above that 10-year average as well. So overall, good news, we're doing better than we've done in the past 10 years, and it looks like on par is slightly below the 40-year average. Now, what we've also tried to do in the very next slide, and I'll go through this fairly quickly so we can move very quickly to implications, is that as we look more closely at the data, the 1990s were really a great time for American philanthropy. A lot of I think the dot-com era in the 1990s, a period of sustained economic growth, led to very strong conditions for philanthropy in the 1990s. We're emerging from the Great Recession. You can see the Great Recession years were a period of remarkably low growth, especially when viewed in historical perspective. What we have here is that the results suggest that giving is going to recover over time, and I think this is taken together very good news for the philanthropic sector. Now, as we think about the outlook and how we can use these numbers in our work and how we can use these numbers to inform the work that we do within the nonprofit sector, I think that the conditions that will continue to affect the outlook overall, it does depend on the underlying growth in both the U.S. Economy, but also the global economy as well. In January 2016, the International Monetary Fund, which releases global projections, projected actually 3.4% growth for the climate, overall global economy, and then 3.6% in 2017. These projections are actually somewhat downward revised, a downward revision from what was initially projected in October 2015. The U.S. projected growth seems to be slightly lower than the global growth that they're projecting, but most experts do not think the U.S. is sliding into a recession. I think most results that we've looked at suggest that the U.S. economy is relatively resilient based on what's happening with low oil prices, with the labor market, as well as with the housing market. Keep in mind that the economic conditions that we've discussed here will continue to affect charitable giving going forward, whether that's current giving or planned giving. And as we discuss these projections actually hold unless the U.S. experiences some unforeseen economic shock. And these shocks could include political changes both in the U.S. as well as outside the U.S. and other types of unforeseen events such as natural disasters. So we have to mention those caveats. Another point to also stress is that there will be geographic variation in how the outlook will play out in various parts of the U.S., with results varying on the East Coast, West Coast, the Midwest, and also the southern parts of the U.S., based on how those underlying economic conditions evolve in those parts of the country. And then finally, as we try to wrap up, our results suggest that this is a very positive time for charitable giving, especially when viewed with the results from the Great Recession. There's a message here of confidence in the nonprofit sector, because the growth in total giving is likely to continue to outpace predicted growth for the U.S. In general, what we noticed is putting our results for 2016 and 2017 together, average annual giving is expected to increase about $13 billion between 2013 and 2017, and this is compared with an average decline that was observed between 2008 and 2012. So the idea of new dollars coming into the nonprofit sector that will be available to charities from donors of all types and all income groups. We're also noting that individual giving will continue to comprise a very significant part of charitable giving. If we add up the segment that comes from individuals and estates, that's going to make up about 79% of total giving, without even adding in the part from family foundations. We're also noting that foundation giving will continue to grow as a percentage of total giving, a trend that actually dates back to the 1980s. In fact, in 2016 and 2017, foundation giving is expected to rise to more than 16% of total giving, and this is nearly a 2 percentage point increase over the proportion of foundation giving realized, say, in 2014. Corporate giving is projected to grow steadily, as we noted, and will remain about 5% of total giving, but there we see considerable change in how corporations are giving. So to sum up, before we turn it over to the next presenter, a message of confidence to the nonprofit sector, but also a note of caution as we think about how the global and national economic and political climate will continue to shape the charitable sector going forward.
Well, thank you for that perspective, Una. This is John Lippincott. Pleased to join you. I really appreciate that note of optimism that you finished on, Una. I'd like to focus on one specific charitable sector, and that's education, which receives roughly 15% of all philanthropic support for U.S. charities. This is the first year that the Philanthropy Outlook has broken out a particular sector to analyze. And for purposes of this study, the education sector includes higher education, private K through 12 schools, vocational schools, libraries, educational research and policy organizations, and other education-related charities. And even if you are not in the education sector, I think there are some important messages in this analysis, so I'll try to tease those out in my comments. So let me begin by stressing that philanthropy is not a zero-sum game. The strong performance of one sector does not come at the expense of other sectors. And while it is certainly true that the prospective donor pools for sectors will overlap, it is also true that success breeds success and donors inspire donors in support of all charitable organizations. So in looking at the education outlook and the numbers for the coming years, as projected by the researchers at the Lilly Family School, this was referenced a bit earlier, the outlook projects an increase in giving to education of 6.3% in 2016 and 6.1% in 2017. I hasten to add that these are inflation-adjusted figures, as were all the figures that Una shared with you. Roughly speaking, the latest data suggest inflation is projected to be about 1.5% in 2016 and close to 2.5% in 2017. This lists the factors that influence the projections for giving to education. I will return to those factors in just a moment. But first, let me put this in historical perspective. The projected growth rates for philanthropic support of education in 2016 and 2017 are well above the sector's 10-year average rate of 3.8%, slightly above the 4-year rate of 5.9%, and equal to or better than the 25-year average. So this does suggest that certainly for the education sector, this year and next are likely to represent a period of healthy growth in giving. If we compare the education sector to all of the charitable sectors, you can see that education in this comparison also is predicted to do very well. As Una reported earlier, giving to all charities is projected to increase 4.1% in 2016 and 4.3% in 2017. And this comparison leads to the obvious question: why are educational institutions likely to fare better than the charitable sector as a whole? So I'll offer two sets of answers. The first set of answers is based on the factors that Una described that informed the Lilly family study. The two primary economic factors that influence giving to education are the growth rates for the gross domestic product, GDP, and for the Standard & Poor's 500. GDP growth is projected to post average to slightly below average gains of 3% in 2016 and 2017. The S&P 500 is projected to post above average gains of 7% in 2016 and 6% in 2017. Now, it's very important to note that the S&P 500 is an unstable variable. The last few months, certainly the month of January, have made that very clear. So while it is a positive indicator, the S&P 500 comes with a fairly high degree of uncertainty. There are two secondary variables that influence giving to education: household and net profit and nonprofit net worth. Both are predicted to post above average gains. So the net result of all of these factors is a positive outlook for education. There are, of course, other factors, some specific to the education, that are likely to contribute to the healthy growth in giving. Educational institutions have been very deliberate about establishing a culture of philanthropy, one that values donors as strategic partners in the future of the institution, and one that encourages giving by internal constituencies. In addition, educational institutions often enjoy long-term relationships with their donors. Much of this can be attributed to the special relationship with alumni. It can also be attributed to well-established programs of ongoing donor stewardship. It also helps educational institutions that many of them have been around for a long time and are expected to remain in business for the foreseeable future. Another factor that contributes to the success of fundraising at educational institutions is their broad appeal. A college or university, for example, can offer contributors a multiplicity of giving opportunities tailored to the donor's interests, from medicine to the arts to economic development. The broad appeal of educational institutions is also geographic. Many universities, for example, enjoy a donor base that is not just national, but international. Educational institutions, to a large extent, have wisely invested in professionalizing their fundraising operations. This includes hiring qualified staff in adequate numbers, deploying sophisticated donor databases, and undertaking research to inform decision-making and resource allocation. Giving to education is also strongly influenced by comprehensive fundraising campaigns. The number of campaigns with goals in the billions of dollars continues to grow, and those campaigns will weigh heavily on the totals for giving to the sector. Tax policy could also be an influence not only for education, but for all charitable sectors. The good news here is that the IRA rollover provision has now been made permanent after years of temporary extensions. In the short term, major changes in tax policy are unlikely given the gridlock in Washington and the presidential election. Longer term, much depends on who controls the Congress and the White House. On that final point, I would simply note that beyond tax policy, the political environment could generate significant headwinds for educational institutions and influence giving, either directly or indirectly. If we look at giving by source to all sectors, as presented earlier by Una, it does also suggest why the outlook for education is quite positive. The two sources projected to show the greatest growth are foundation giving and estate giving. I would simply suggest that these are areas of particular strength for the education sector and will therefore contribute to the healthy increase in giving. To reinforce this point, let me share with you some numbers from the most recent Voluntary Support of Education survey put out by the Council for Aid to Education. The VSE report for the fiscal year ending last June 30th shows that foundation giving was the single largest support for colleges and universities. There are two other points I'd like to make quickly regarding the VSE report. Alumni giving increased 10.2% over the prior year. Colleges and universities have been concerned in recent years by a steady decline in the alumni participation rate. The participation rate is simply the percentage of the total alumni body who make a gift in a given year. Despite the increase in total alumni giving last fiscal year, the participation rate continued to decrease. And I suspect two forces are at work to explain this seeming contradiction. First, the total number of contactable alumni is growing faster than the total number of alumni donors, and that contributes to the decrease in the participation rate. Second, given the demographics, and Una referred to this, the demographics of the alumni population, the baby boomer generation is now making significant lifetime gifts, and that contributes to the increase in total giving by alumni. One last point regarding the VSE report. Total giving to colleges and universities reached a record $40.3 billion last fiscal year. Of that amount, nearly 30% of the money went to less than 1% of the institutions. So what do we conclude from all of this? Well, let me simply suggest a few takeaways for the education sector that actually apply to all sectors. In planning your fundraising activities over this year and next, you should plan for growth. If you are considering launching a campaign or simply hiring additional staff, you can do so with a reasonable degree of confidence that the external environment will be conducive to increasing philanthropic support. I would submit that those who invest in their fundraising operations are those most likely to benefit from the positive climate for philanthropy. As always, you will need to plan to adjust. You should follow the Willie Sutton principle. Go where the money is. That would suggest a strong focus on foundation giving. It would also suggest a strong focus on estate giving. You also need to plan to adapt. The philanthropic outlook is a broad measure of projected performance. You need to apply that general assessment to the specifics of your organization and your donor community. And you need to be prepared to make adjustments if there are external shocks to the system, such as a major economic downturn. And finally, and most importantly, you should plan to engage the donor community. More than ever, the level of donor engagement will drive the level of donor investment. So with that, I will turn things back over to our moderator.
Thank you, John and Una. So the first question, Una, is why in this second edition of the Outlook did you provide projections for giving to education, and going forward, do you think that other sectors will also be included? I'm sorry, I think somehow we've muted Una, so let me see if I can unmute her. I'll tell you what, John, while we're trying to figure out how to unmute Una's phone, I'm going to kick a question over to you, and that is, what is the role of these mega campaigns at universities? Is this a good thing or a bad thing?
It's certainly a good thing. Quite frankly, billion-dollar campaigns are a natural extension of the remarkable tradition of philanthropy in this country, philanthropy in support of higher education, if we're talking about the mega campaigns at universities. Frankly, if there were no billion-dollar campaigns, it would signal that there is a flagging in that tradition of philanthropic support for education. The only way in which I would see them as a bad thing is if we become too focused on the dollar figure rather than the impact that support has at the institution, on students' lives, on the economy of the region or the nation, on research in important fields. So there is a potential political downside to the discussion around billion-dollar campaigns that causes, for example, state legislatures to think that this may mean there can be a reduction in state funding for educational institutions. Of course, those of us who have worked in this sector know that donors are not interested in filling a state budget gap. Quite the contrary, they want to know that the institution is adequately financed by the state so that their philanthropic dollars can have a significant impact beyond the ongoing operations of the institution. So I think the key is that when we talk about the mega campaigns, we talk about the mega impact, not the mega dollars.
Great. Thank you very much, John. Let's see if we can get Una back on to answer the question about why education and are there likely to be other sectors in the future that we will offer projections on giving to.
Yes, thank you, Lori. This is Una. I just wanted to say that the philanthropic sector is as we noted, is a growing part of our economy, and that the role of the Outlook, or at least the initial motivation for this, is to provide nonprofits, donors, and leaders with more information. And so we started with education because this is the subsector that actually currently has the best and perhaps the most accurate data over time. So we can look back 10 years, 20 years at the performance of the sector. And so this is a good place to start. But we also plan, and I think in future years, we'll plan to actually expand this analysis so that we can provide accurate information in other fields where I think this information is also widely needed and would be used most certainly by that sector. So this is just the beginning, but we think education is a good place to start. One, because the data is available, and two, this is actually the second largest subsector within giving after religious giving. And it's an area of a lot of interest, I think, from donors, but also nonprofit leaders and practitioners.
Thank you for that, Una. And this question is also for you. There's a question about the growth in giving projected for 2016 in the Outlook, it being at 4.1%. And then in an earlier study released in January, that the projected giving rate was 2.6%, and I believe this person is referring to the Atlas of Giving. And she wondered if you could comment on that.
Yes, I think that's also a very good question, and we certainly think that research in the sector is very important and encourage more actors, more organizations to get involved in research. What we also say is that it's important that research is transparent so that we can actually compare results over time. And one challenge I think with some of the sources out there, not all of them, is that it's very difficult to actually compare because the methodology is not very transparent. I think over time it will be important to compare the results of the Outlook with other studies, especially where methodologies are available so that we can do that comparison.
And in the foundation category, Una, what percentage comprises individual family foundations versus private and public grant-making institutions?
Right, I think that's quite difficult to get a very precise number because, as you know, family foundations are not an IRS category. That's something that we go in and code those organizations. In the past, this has ranged from about 50 to 60% can be attributed to family foundations, and then the rest independent foundations that are larger entities. And I think over time, it will be interesting to see how that split unfolds, because there's certainly a discussion about how the foundation sector is changing as well.
And John, I know you touched on this in your presentation, but perhaps there's additional comment you would want to make. The question is, with individual giving growing at a slower rate, how will that impact participation in annual fund support?
I think if you focus specifically on the annual fund piece, you may want to scale back a bit the overall projections for the education sector. So if you're at a college or university and you're looking at these growth rates in excess of 6% for the university as a whole from all sources, as the questioner rightly points out, the household income factor is growing at a slower rate than the foundation giving is likely to grow or than estate giving is likely to grow. So for purposes of planning for annual giving growth rates, I would scale back a little from that those 6% figures.
And John, a segue into this, how significant will social media be in giving to education and other sectors going forward?
You know, Una referenced, I think, 10% growth in the recent year. We've been seeing double-digit growth rates in giving through social or because of social media. Now that was from a relatively small base, but I think that growth is very likely to continue. I think it's extremely important to embrace social media, first of all, because it's a wonderful donor engagement tool. And as I referenced at the conclusion of my remarks, donor engagement is going to be critically important going forward. So I would look at social media first in terms of donor engagement, second in terms of donor acquisition at the more modest levels of giving. And it is a very efficient means of raising smaller gifts. So I would encourage folks to certainly get on board if they're not on board with giving through social media. It's not a tool primarily for major gift fundraising, at least not yet. We do hear anecdotes from time to time about six-figure gifts that came in through social media, but I would not build your major gift program around that factor.
Thank you, John. Una, there's a question about how political giving impacts the outlook in 2016.
Yes, that's a great question, and one that we have been actually hearing quite a bit about, especially in this election year. I would say our past research has shown that political giving is very small when compared with overall charitable giving, and we don't see that the election cycle or the presidential elections dampens charitable giving. We've also looked closely at giving to political causes and whether that crowds out giving to charitable causes, and have found, generally speaking, that a very small fraction of Americans actually give to political causes. Most recent estimates suggest about 12% of Americans engage in political contributions, but I think the internet is changing that. Many more households are participating in political giving, so this might look very different in the future. The other point I would note, similar to what my colleague John discussed, is that it certainly affects the charitable landscape in other ways. Certainly the policy discussions that are taking place around various topics, whether that's immigration, labor market policies, and a number of other issues, have the potential to impact giving through other means. In other words, by raising these issues, this can have both a positive as well as a negative impact on giving to specific subsectors. So what I have said in other discussions around this topic is that there are opportunities for nonprofits to take advantage of if they're working in an area that's generating significant political debate. And there may also be challenges in messaging for organizations that, say, are working on immigration or other areas. And so this is both, I think, an opportunity to build donors, potentially, and build a community of donors that are engaged with the work of the nonprofit in areas as diverse as education, healthcare, labor market, economic development, so many other areas, but also to pay attention to how policies that are being discussed might affect the work that nonprofits are engaged in.
Well, I think with that, we will end today's program by saying thank you to everybody who joined us on the web seminar. We were pleased to have you, and if you have additional questions that you would like to ask to the presenters, you're welcome to email me. You all should have my email address, and I'd be happy to pass those along. We also will send out, as I mentioned before, a link to the recording as soon as it's published, and that should be later this week or Monday. And we're happy to send out any additional information you'd like if you would like to see a copy of the PowerPoint. And again, thank you, John and Una, so much for your time and your thoughtful comments today. We appreciate it very much.
My pleasure.
Thank you very much, Lori. It was a pleasure.
Everybody have a wonderful rest of the day.
Thank you.